What's up, subscribers? This is Martin Day Trades. My name is Martin Anthony Gonzalez, and I just want to say welcome to my channel. And if you guys are here because you're day trading, then you guys came to a good spot. I've been day trading for 2.5 years now, and I have something special here on trader mindset. Um, the master key, the number one reason for trading success is, and you guys clicked on this thumbnail to watch the video, and I'm gonna tell you guys right now, you're gonna be surprised. It's not how well you can chart. It's not how your feelings. Because if you're an emotional trader and you don't have a trade plan and know exactly the percentages and the lot size prior to entering a trade, you're just kind of gambling, guys. You're gambling, right? And that's okay because everybody's a gambler as soon as they walk into the markets. You're not a sniper yet, and that's okay. Uh, the more time you spend in the online markets, the more refined you're gonna get. It's rinse and repeat. It's day in, day out. It's that mindset of how can I look to just get a little bit better each and every day, just a little bit better. I don't gotta be me right now, guys. I don't gotta be buff tomorrow to feel like I'm successful. What I mean by looking to be 1% is okay, well, how can I be more patient? How can I be more impeccable with my word? I am now no longer gonna FOMO in or out of trades. I will not enter a trade unless my optimal trade entry gets uh, tapped into. And that's being very strong with who you are as an individual. Not to place a trade today because something didn't happen is very powerful and says a lot about the trader, meaning, hey, they don't have to place a trade to make money. Because if you're trying to make money in the online markets, you're going to get clapped. You have to want to win properly to the ratios, to the trade plan, to your rules. So this is the master key. The number one reason for trading success is you must watch to find out. Well, I'm going to tell you guys right now what it is, and that is capital preservation. Capital preservation to me is the one thing that I had to really grasp my mind around because there's a lot of stuff that goes into capital preservation. The best day traders in the world do not give up their profits so easily. They're willing to risk that 1% day in and day out. And the longer you stay in the markets, there's going to be days where your setup doesn't present itself. So now you're losing less than negative 1%. I mean, you're not losing. You're just staying at zero. So then let's say you didn't take a trade for Monday. You won a 3% trade on Tuesday, 3% trade on Wednesday. You lose 1% on Thursday, and you don't even take a trade on Friday. Guess what? That's 5%. 5% of what, you may ask? Let's say it's a 300K account. That's $15,000 off a 300K account. That makes sense to me to just take a little bit and not take a just be on the right side of a winning trade, and you don't have to take the whole pie. All you got to do is make sure you're taking profit 3-4% on good days and about 8-9% on really good days. And on every day you're only max 1%. That's the hard part because when you're in the beginning, when you're in the markets and you lose money, you're like, I gotta win it back, I gotta get it back. But if the setup presented itself and the trade already started to trade off, meaning it's not gonna go back to that premium price, your risk to reward gets skewed, and the move is only going to move X amount of pips a day. So let's say you're risking 50 pips, the move goes to 150 pips, but you don't enter at the premium price zone. You say that you enter 50 pips higher, you're only going to get a 1-to-1 risk to reward because you're entering 100 pips above the premium price and then you only got like 100 pips to go. So that's not very good. That's and then it takes courage to actually hit the buy and sell button. So that to me that was the initial part of my trade career is just being able to hit the button and not being scared to like get into a trade. So now I've accumulated enough experiences to know that I only get really one trade because as soon as the trade trades off for any asset class, you could be trading silver, gold, Bitcoin, gold, Nasdaq, Dow Jones, any forex pair. Soon as the trade takes off, It's taken off. Any entering after that is just FOMO, and it's greedy and it's fearful. But being as a sapien as we are, and the way we kind of came from our ancestors and how we had to be to survive in the past when we were hunter gatherers, foragers, was to be in that mindset when we were looking to get like bananas or whatever, the mammoths, whatever, right? But what over time, what a lot of people who accumulate wealth find out is if you can um, delay gratification, it yields more later on. Just because it hasn't happened yet, does it? So a lot of farmers believe in that. A lot of farmers will go and tend their farms. They plant seeds, and they don't see a reward for months later. But they delayed the gratification, did the work, and then yielded their product, and then sold it for profit, fed themselves. So a lot of people, once they get to the part where they don't really want to like make money, all they want to do is win and then delay gratification. It kind of creates this thing called a flow state. A flow state is being in the zone. I don't even know if you guys even know what that means. I'm just saying some words, but um, what it means is you lose perception of time because time is man-made, and then we're trained to kind of be on this like internal clock, tick 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 tick, but that doesn't really exist. All that exists is the now. All that's ever has been is here now. Energy cannot be created or destroyed. All it could do is be transferred. So the land that we see has been recycled through the earth's tectonic plates and stuff like that, and it's just been recycled. um so it's hard to explain that theory and concept, but something that I stumbled upon and created a belief and idea around that whole concept. But once one gets to the realization that capital preservation is the most essential, crucial part to trading, it'll elevate your P&L at the end of the day. So let's say you're a negative trader. Now you're losing less negative and you're more towards break even. Then you get to a level where you're running a range between negative 10 to 10% in any given month. And then it turns into like, hey, I'm having like negative 5% like max in a month. And then, but I'm gaining 10% consistently another months or weeks, weeks, guys. And then it goes to weeks where you're just break even and pulling in 5%, 10%. Essentially, at that point, you're a profitable trader. It's not by much, but you are. And then it goes from being profitable 2 to 5% a week to being profitable like 2 to 7, 5 to 7, 7 to 10, 10 to 15. Like my mentor Andre made 60% last month. Last week he made 0%, but that doesn't mean he can't make 3 weeks back to back 10% each week and still be up 30% for the month. 30% of what, you may ask? He has a 100K account, so he made 60,000 last month. That's most people's salaries. So you have to believe in the numbers and know that this is a scaling your percentages to your account size and just adjusting the lot sizes to account for that, and to understand it's a marathon. It's once you get your 1% max a day, guys, that's it. You got to go. You got to kick rocks. Go put your feet in the grass. Go feel nature. Go out there and be a human being. You got to get off the computers. But that's the part where, beginner traders are stuck glued to their computers all day. And I've been through it. I know what it is. I wanted to learn as fast as I could. Did the work, right? But now it's like rinse and repeat. Trading is fucking boring. It truly is. It's the same shit, and then it's only in the morning. Like, then you have the rest of the day. Like, what am I supposed to do with the rest of the day? I work, but once I get funded and I'm making more profit than not on a weekly basis, I'm gonna be a bored motherfucker. I'm gonna go to the gym, but I already do that kind of now. So it'll be something interesting because then I'll be able to like do new things. I've been wanting to do MMA, UFC, so I'll probably do that for a solid year. Year ain't really that long, but it's enough to get past beginner stage, within beginner stage. Um, but yeah, guys, capital preservation is key, and the way there's a lot of pieces that tie into capital preservation, and one of them is this lot size cheat sheet that I created here, which if I'm gonna risk, see the difference between 5 pips is significant. So from 50 pips risking 1%, that's 2 lots. But if I'm risking 45 pips, the lot size is gonna be 2.22. You get that? So let's say I'm risking 55 pips. The lot size isn't going to be 2 lots. It's going to be 1.81. And that's how meticulous you have to be with the numbers to stick to the 1% rule. Because let's say you're really risking 55 pips, but you're keeping it a 2 lot. You're now risking more than 1%. That's going against the rules. You gotta stick to the rules. And that the lot this right here was another one of the reasons why how I got better. Um I am trading right now on TradingView because my FTMO account, I clicked on MetaTrader 4, guys, and I don't really want to trade MetaTrader 4. MetaTrader 5, I accidentally did that. But because I did that, I also got a lot better with my trading, meaning I have been a lot more patient because I'm not getting emotional with seeing the numbers on the P&L. All I do is trade the charts now, essentially at this point, to the ratios, which I've yielded profits week in and week out. Out of the last 8 weeks, I've had 2 red weeks, meaning I've lost money on those days. But the other 6 weeks I've been profitable, so that says something that I'm on an upward trend. So it's when I start getting wanting to make money in the markets is when I get clapped, guys. That's so important, capital preservation, that I cannot stress that you have to love to understand the ratios. If you're trading to make money, yes, that's cool. But if you're trading to make money now and you're not at the level to where you're able to take pips out of the market and secure profit and to minimize risk and to mitigate, you're a money manager and risk manager, like you're gonna lose money. You can't want to make money when you're not at that level yet. You have to just back test, creates confidence, learning a little bit about the history of trading, um, actually trading, actually charting, and then watching profitable traders trade live. So it means actually watching for an hour of video, 2 hours of video. But that's where that experience comes in because now you're not only day trading the live markets, but you're also getting the experience of other profitable traders, which is going to increase your learning curve exponentially. So, with that being said, guys, capital preservation is the master key to trading success. It is the number one reason why traders, the most profitable traders in the world, stay profitable. And once that really went into my trading, because I used to have a bad tendency to overtrade, revenge trade, FOMO trade, all types of fucking emotional trading, right? Pattern day trader, retail pattern day trader, like that was the worst time of my life. My cousin Miguel showed me how to trade, but he was teaching me how to trade triangles and bullshit. And then we're all reacting to what happens because we're waiting, and then that's not real because there's no ratios to that. You don't know how to adjust your position sizing to the trade, and it's just one of those things you have to refine over time and choose one asset, master it, and then move to a second asset, and only take the trades and still risk 1%. You could have two different accounts. One is for the Dow Jones, one is for the Nasdaq. And there's benefits to this, guy. As soon as you get a $25,000 of profits, let's say you do the FTMO, you're getting funded. You make 100,000. What you can do with that 100,000 is go into a Roth IRA, put 50,000 in there, and then start running up 50,000. And let's say you make 30 million after 50,000 by the time you're 55 years old, when you're able to take out your Roth IRA tax tax free, meaning like there's no tax deduction, like they don't take taxes out. Once you're 55, whatever is in your Roth IRA that appreciated, you take that out fully. No taxes are taken out of that. So let's say you ran 50,000 to 50 million. Dude, you got $53 million without having to give tax just because you link two accounts and you're trading the same fucking. There's ways to link accounts, guys, too. Just by the way, the more you know, the more you know about using other people's money. The more you're gonna learn where you can get other people's money online. for the skill set for the trader skill set and being able to prove profitable. So with that being said, guys, this is Martin Day Trades. You can follow me on Instagram, martin.daytrades. Like, comment, subscribe. This is Trader Mindset, and tune in for tomorrow's videos.